After watching this video, you are going to understand why do we need rules for accounting, what is journal, what are the different types of accounts, what is personal account and its types, what is impersonal account and its types, golden rules of accounting, and how can we apply these rules. Now, first of all, we are going to understand why do we need rules for accounting. As you guys know that in double entry system, due to its dual aspect, every transaction affects two sides, and so to pass journal entries, we require certain rules to enter the transactions in a systematic or say chronological manner, and those rules are called as golden rules of accounting. Now you must be wondering about what is journal. A journal is a book of original entry wherein all the transactions are recorded as and when they take place. It indicates which account is to be debited and which one is to be credited. It keeps a record of all the transactions on a daily basis. The process of recording transactions in the journal is known as journalizing. Now, after understanding what is journal, we are going to discuss about the classification of accounts. In journal, the transactions are recorded on the basis of rules of debit and credit. So, there are three broad classification of transactions: personal transaction, transaction related to assets and properties, transaction related to expenses, losses, incomes and gains. So, on the basis of these transactions, there are two broad classification of accounts, that is personal account and impersonal account. Further, the personal account is divided into three types: natural personal account, artificial personal account and representative personal account. Further, impersonal account is classified as real account and nominal account. Broadly, there are three major classification of accounts: personal account, real account and nominal account, wherein the personal transactions are covered in the personal account, transaction related to assets and properties are considered in real account, and transaction related to expenses, losses, incomes and gains are covered under nominal account. So, the golden rules of accounting are provided for personal account, real account and nominal account. Come, let's understand what is personal account. Accounts belonging to persons, trade receivables, trade payables are termed as personal account. Here persons means real persons and artificial judicial persons such as companies, government organizations, society, etc. Personal account can be account of a company, bank account, accounts of debtor, creditor, etc. There are three types of personal account. As we have already discussed in the classification: natural personal account, artificial personal account and representative personal account. Natural personal account. As the name suggests, accounts related to human beings such as Joseph, Alex, Jimmy, Harry, etc. are called as natural personal account. Artificial personal account. As you guys all already have an idea of that in the eyes of law, a business entity is a separate legal entity. It has a separate legal standing. So, accounts of companies, clubs and societies, government organizations are covered in artificial personal account. Lastly, representative personal account. Accounts other than natural personal account and artificial personal account are categorized under representative personal account. It reflects collective accounts such as capital account of the proprietor, drawings account of the proprietor, outstanding liabilities account, etc. Next, what is impersonal account? As it is evident from the name itself, accounts which are not personal are called as impersonal account, such as building account, salaries account, vehicles account, etc. There are two types of impersonal account: real account and nominal account. Accounts belonging to firms' assets, properties and possessions are called as real account, such as machinery account, cash in hand, investment, fixed deposits, etc. Nominal account. Nominal account are the accounts belonging to expenses, losses, incomes and gains, such as accounts for salary, rent, interest paid, dividend received, commission received, discount received, etc. Golden rules of accounting. The three major types of accounts, that is personal, real and nominal account, have two rules each, one for debit entry and one for credit entry. So, the rule for personal account is debit the receiver, credit the giver. That means while passing journal entry, you will debit the name of the receiver, that means who has received the amount, and credit the name of the giver, that is the one who has given the amount. Next, in case of real account, you will debit what comes to the business and credit what goes out of the business. Suppose you have purchased a vehicle of rupees 40,000. So you will debit what comes to the business, and here in this case a vehicle comes to the business. So you will debit the vehicle account and credit, that means cash goes out of the business, so you will credit cash account. Lastly, for nominal account, you have to debit all expenses and losses and credit all incomes and gains. That means you will debit all the expenses that the company has made and credit whatever the incomes generated by the business. Now we are going to understand how to apply these golden rules with the help of examples. Business commenced with capital rupees 2 lakh. In this transaction, two accounts that are involved are cash account and capital account. Cash account is a real account. So you will debit what comes to the business. Here cash comes to the business, you will debit cash account, and capital account is a personal account. You are going to credit the capital account of the proprietor of business. So the journal entry would be cash account to capital account. Next, purchased machinery worth rupees 10,000 for cash. The two accounts which are going to be affected in this case are machinery account and cash account. As both are real account, you are going to debit what comes in and credit what goes out. So in this case, machinery is coming to the business. So machinery account will be debited and cash goes out of the business. So you are going to credit cash account. So the journal entry would be machinery account to cash account. Next, purchased goods on credit from Nancy rupees 5,000. The accounts involved in this case are purchases account and account of the creditor, that is Nancy. As purchases account is a nominal account, you are going to debit the expense, as purchase is a expense of business. So you are going to debit it, and creditor account, that is Nancy's account, is a personal account. So you are going to credit the giver. So purchases account would be debited and Nancy's account would be credited. Salaries paid rupees 20,000. Here two accounts are going to be involved, salaries account and bank account of the company. As salaries account is a nominal account and salaries is a expense of business, so you are going to debit the expense, and bank account is a personal account of the company, so you are going to credit the giver, that is you are going to credit the bank account of the company. So in this case the journal entry would be salary account to bank. Fifth example, sold goods rupees 80,000 to David and received a check against it. The two accounts which are going to be affected would be bank account and sales account. As bank account is a personal account of the company, so you are going to debit the receiver. The company's bank account would be debited, and sales account is a nominal account because it is a gain or income of the business. Income is credited in this case. So the journal entry would be bank account to sales account. Lastly, dividend received. Dividend is received, that is income is coming to the business. So the two accounts which are going to be involved in this case are bank account and dividend account. Now bank account is a personal account of the company, so you are going to debit the receiver, and dividend account is a nominal account, so you are going to credit the incomes. So the journal entry would be bank account to dividend account. Okay friends, this is all for this video. I hope you find it informative.